Jerry Gidel will update his estimates for the supply and demand report to be released next week by the USDA, and he's going to assess this week on the markets in the Chicago Mercantile Exchange. On Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. If you're new here, please make sure you subscribe. So, Jerry, we are closing the week with soybeans jumping for 2 consecutive days. Do you think that's related to weather in South America? We are seeing more heat in Argentina and southern Brazil.
Well, I think that's part of the features there, part of the consideration that the trade was looking at here. From there, also, we had a midweek update on our October U.S. soybean crush that was a new record by 300,000 or 400,000 bushels above the previous one, and that kind of invigorated people's attitudes that this whole world supply demand, or actually supply chain issue, I should say, for lysine has definitely captured the U.S. livestock producers and the need in the corn for poultry and in pork, that they're going to have to possibly need more soybean meal going forward. And so that helps things justify expanded crush here from the standpoint that there has been a lot of optimism about soybean oil being utilized in renewable diesel, and that expanded green ideas. And so you put that all together, it's the meal side of the market is a positive one going right now. Exports yesterday, after a correction in the numbers that came out, they've actually issued the previous week's numbers by the USDA instead of the correct one, and that. But even then, there's generally optimism here about the short term, at least on soybeans. There's still a lot of cautionary tales here about how strong the Chinese are going to be going forward, though.
And how are you seeing the wheat market? Wheat had a correction this Friday, but after having a significant rally on Thursday.
Well, the kind of the same situation here. Everybody took a bath on Friday, except for actually for corn that day, last Friday. But then basically the early part of this week, everything took a early bath. The week kind of started back on Wednesday and again on Thursday here, as there was some very good tender action going on in the markets. We ended up having Tunisia buy some things. There's a big tender out here for, for Saudi Arabia for over 500,000 metric tons, and that. And then there was the issues in Australia, I should say, where the rains are still very important to, and actually seems like that ideas of an expanded Australian crop could be negated by poorer quality. But actually, part of today's reaction today was the fact that our friends in north of the border here in U.S., their updates for their final kind of update for their wheat crop actually showed the expansion here in the overall spring wheat crop. It was up about 1,200,000, 1,300,000, I think it was, and that. But interestingly enough, it was from the standpoint that the durum crop, which is your primary variety of wheat around the world that makes pasta, which is a very important feature in many parts of the world. They had a reduced crop of just under 1,000,000 metric tons. And so to some extent, if you're a pasta eater, you might want to jump out there and buy some pasta for your spaghetti and elbow macaroni. and that for your mac and cheese, or things could get a little different here as we go forward, particularly in the Americas at this point. But that was the feature today that took the wheat off. According, and actually, one thing that kind of came in late today's session, and it's hard to really judge. The rumors are that the Russians are going to have a 14 million metric ton quota for that February to June period that prompted concerns and actually helped push the wheat prices to some of its highest values here earlier this month when that was talked about. 14 million metric tons sounds like a relatively small number to me, but I guess it was a number that was higher than some of the people in the trade were looking for. So put together the Canadian crop number and also this Russian quota number that was moving it through the trade today, and that beat it back up backwards here on the wheat. But corn and soybeans definitely were the firm ones today.
Yes, and do you think the new COVID variant is playing a role in the commodity markets right now, or the market's just ignoring it?
Uh, they definitely didn't ignore it last Friday when they had a very thin trade when that first came out, and it kind of impacted us early in the week when people are still. I think unknowns are always a negative factor in the world of futures and commodities, and that when people don't know for sure what it means, and that they exit stage left. And boy, we had a reaction as time goes on, and some of the experts here in the health world in the U.S. and around the world have pointed out that so far, at least, this Omicron variant from South Africa has not shown to be as vicious of a COVID situation as some of the previous Delta and other ones in the past. And so that being said, there's been a little bit of lessening of that concern. The problem is that that's still a factor in here. I think that the markets, particularly since we've had such a this is going, we're still like 18, 19 months into this thing and it's still hanging around. That's not the way the financial world and the commodity world likes to things do. They want to get something figured out and move on. And that hasn't been the case in this situation. I think still the US and around the world here, we're still hanging together and getting some kind of economic activity going on. I think today's stock market was a little disappointed with the unemployment numbers, or at least the number of employment people on the thing. But in its own way, the world is definitely looking forward to maybe a more positive situation out of the latest variant. But it's still out there, and until we get more information about it. And right now, there's a lot of optimism that the current booster shots and things like that can pretty well handle it in America. Now, that's a feature that's still hugely important around the world, though. Definitely, there's a lot of things that need to happen here to continue to fight the COVID-19 pandemic. It's not over yet today.
So we are headed next week to the December supply and demand report by the USDA. So are you seeing any changes from the previous report, Jerry?
Well, we've the interesting twist. The USDA made some adjustments in its export activities in both wheat and beans last month, and they kind of shaved them back. The beans actually are pretty well on the target for the current 2,050 million number that was reduced down 40 million. So surprisingly, it's substantially behind last year. We'll probably never see the type of purchases made by the Chinese a year ago that bought these beans and huge levels, and it really pushed the seasonality of their purchases out, particularly sharply out of whack. And that, I think the combination of concern about the La Nina last year drying out multiple areas of South America added to that purchases maybe in the fall that maybe would not have happened. But in case of both of those, and even corn at this point, the export world is actually because we're further ahead on corn than a year ago, and seasonally like about 150 million or so ahead of the seasonal trend. I don't know that there's going to be adjustments there. Domestic demand, ethanol, they increased that number last month by 50 million. There's a possibility, maybe because we had a very strong month here in ethanol output and corn usage this fall, and that maybe they could tinker with that. But I'm anticipating that to really be the limited scenario, though, too. And the only one I think they might adjust going forward is the U.S. soybean crush. We mentioned the scenario about how strong the data was earlier this week. It really, and I think the situation continued here during November. That was an October data that we got updated, and so and this whole issue of lysine and the impact of that within rations, and that I kind of feel like that's going to be a strong point, and particularly as people continue to look towards expanded green diesel fuel, and that's they might make an adjustment there. I don't know, it's going to be huge. I'm looking for 15 million adjustment on that, which could take down the carryover stock. But I'd have to say that looking at the trade average guesses, I'm on the low end of the expectations here for carryover stock at 325 million. I guess maybe it'll work, maybe it won't. Maybe the USDA is going to really stand pat. That's not an unusual situation here during the month of December on these reports, because the biggest thing in this whole thing is what the final production numbers and what's really going on in South America really isn't totally known until we get into that January final production number and how things are moving along in South America. And you pointed out definitely some dry situations that are starting to develop, and that so that could make things interesting as we get to next month's USDA's updates. This month, it's sometimes we just kind of sit back and count our presents and think about other things than the commodity numbers here from the USDA.
What are the other things that you are watching next week?
Well, of course, we're going to be watching, like you just mentioned, the weather down there. And that, I guess the one thing that I also want to pass along is that the volatility that we just experienced over this last, going into Thanksgiving, out of it, back this week, that's really an interesting situation when you start to get those kind of patterns in commodities. That also prompts people to decide that maybe they should be taking, that our investors decide it's time, maybe they want to end up either taking their bullish position off or take their short position off, and that as this market there. And so things kind of calm down here, particularly the last 2 weeks of the month. So I'd encourage people out there that I realize that they're probably don't need money until next year type situation, and that I would encourage them to think about forward contracting or moving things and take their money in 2022. From there, as we approach this 580 to 590 situation of March corn, or as we get up into the 1270, 1280 type situations on beans. Those are pretty good values. Wheat, we're definitely off the highs of this market that we had back through a couple, 3 weeks ago. But in general, it's always good to have a little money in the pocket and organized for the 2022 year. And I encourage people to look at taking advantage of bounces in this market. So I think that we're going to get a lot of people decide they want to be on the sidelines.
All right. Thank you, Jerry.
You bet. It's always good to be with you, Luis, and we'll look forward to next week here. At this point, I guess we need to buckle up our safety belt. You never know what might happen.